The Rezolve AI stock I covered recently went from $2 to $7.80. That's 300% gains, making subscribers serious money. But I believe this AI retail revolution is just beginning. Rezolve just doubled their 2025 revenue guidance to $200 million ARR, landed partnerships with Microsoft and Google, and is now serving Adidas, Gucci, and Target. This stock could explode from here. Stick around. Hey everyone, Sterling from Velocity Stocks. Welcome back. I hope you're capturing these AI opportunities and building your portfolio. Hit subscribe and turn on notifications. I analyze high-growth AI stocks weekly. You don't want to miss the next breakout. Let's dive into Rezolve AI. The AI retail commerce market is exploding. Retailers are desperate for AI solutions that increase conversions, reduce cart abandonment, and personalize customer experiences. The global retail market is worth $30 trillion, and AI is transforming every aspect of it. Rezolve AI operates at the intersection of conversational AI, e-commerce, and fintech. Their Brain Suite platform uses proprietary large language models to power intelligent shopping assistants, frictionless checkout, and personalized product discovery for retailers worldwide. Major tech giants, Microsoft and Google, have both partnered with Rezolve, integrating their platform into Azure Marketplace and Google Cloud. This gives Rezolve instant access to tens of thousands of enterprise customers globally. The company is processing over $50 billion in gross merchandise value, serving major brands like Adidas, Burberry, Gucci, Puma, Target, and now KFC and Liverpool FC. They've reached 57 million consumer devices. This is about a small, 26-person company with explosive technology that is being adopted by the world's biggest retailers, backed by the world's biggest tech companies. The company is Rezolve AI, ticker RZLV, trading on Nasdaq at $2.55. Rezolve was founded in 2016 and is headquartered in London, United Kingdom. Employ just 26 people, which is remarkable given their client roster. The company rebranded from Iris Energy to Rezolve AI in March 2025, signaling their full commitment to AI-powered retail solutions. Their Brain Suite platform includes Brain Commerce for personalized shopping, Brain Checkout for frictionless payments, and Brain Assistant for AI-powered customer support, all powered by their proprietary large language model, BrainPower. This is a lean, tech-focused company with blue-chip clients and hyperscale partnerships driving explosive growth. Let me give you 5 massive catalysts that could drive Rezolve from 255 to double digits. Catalyst number 1. Revenue guidance doubled. In December 2025, Rezolve announced preliminary year-end results showing annual recurring revenue for 2025 is expected to exceed $200 million. That's double their original $100 million target. They reaffirmed $500 million or more ARR by end of 2026. December revenues alone exceeded $17 million, their strongest month ever. This is explosive growth being recognized by the market. Catalyst number 2. Microsoft Strategic Partnership. In October 2024, Microsoft and Rezolve announced a 5-year strategic partnership. Rezolve's Brain Suite is now powered by Microsoft Azure and available globally via Azure Marketplace. Microsoft is providing extensive go-to-market and co-sell support, giving Rezolve access to Microsoft's 35,000 incentivized sellers. This partnership positions Rezolve to scale rapidly across Microsoft's massive enterprise customer base. Catalyst number 3, Google Cloud integration. Rezolve also partnered with Google, integrating Brain Suite with Google Cloud. The company's BrainPower large language model is now empowered by both Microsoft and Google infrastructure. Having both tech giants backing your AI platform is massive validation. It accelerates enterprise adoption and provides global distribution channels. Catalyst number 4, Blue Chip Client Roster. Rezolve's customers include Adidas, Burberry, Gucci, Tommy Hilfiger, Puma, Target, Standard Chartered, Commerzbank, KFC, Phoenix Suns, and Liverpool FC. These aren't small retailers. These are global brands processing billions in transactions. The company has processed over 51 billion API calls, has hosted over 340 million mobile user sessions, and reached 57 million devices through their SDK. Catalyst number 5. Balance sheet cleaned up. Rezolve converted over $49 million of debt into equity in 2024, strengthening their financial position. Blue chip investors like Aperon Investment participated in a $59 million debt-to-equity conversion. The company also raised $15 million in additional capital. They now have a clean balance sheet to fund aggressive expansion without needing dilutive financing. Let's break down the numbers. Current stock price, $2.55. Market capitalization, $821 million. For a company projecting $200 million ARR in 2025 and $500 million by end of 2026, an $800 million market cap could be undervalued if they execute. Average daily volume, 18 million shares. That's excellent liquidity. This stock trades actively with strong institutional interest. All-time high, $11 in May 2024. The stock hit 11 just 7 months ago following the Nasdaq listing and partnership announcements. It's now at $255, down 77% from peak. That creates a massive recovery opportunity. Let's look at price action. 1 month range, 220 to 320. The stock is consolidating near recent lows. 6 month range, $2 to 780. The stock hit 780 in June, over 3 times the current price. 1 year range, 115 to 780. The stock more than quintupled from its lows earlier this year before pulling back. The stock rallied 27% in a single day in December following the revenue guidance announcement. That shows the market is highly responsive to positive catalysts. If they continue delivering on growth targets, the stock could re-rate significantly higher. From a valuation perspective, if Rezolve hits $500 million or by end of 2026, and the market applies a 3 to 4 times revenue multiple typical for high-growth SaaS companies, you're looking at a $1.5 to $2 billion market cap. That's double to triple from current levels. Now let's talk about the severe risks. Rezolve AI is a small cap, volatile stock. It can swing 20 to 30% in a single day. If you can't handle extreme volatility, this is not for you. The company reported immaterial revenue for 2024. They were focused on building infrastructure, landing partnerships, and onboarding enterprise clients. Revenue is expected to ramp in 2025 and 2026, but there's execution risk. If they miss their $200 million ARR target for 2025 or $500 million for 2026, the stock will get crushed. The company is not profitable. They're burning cash to fund growth. While they cleaned up the balance sheet, they'll need to raise more capital if growth slows or revenue doesn't materialize as expected. Competition is intense. Shopify, Salesforce, and other e-commerce platforms offer AI tools. Rezolve needs to maintain technological advantages and continue winning enterprise deals. There's also regulatory risk around AI and data privacy. Any negative developments could impact operations. This is not a conservative investment. It's a speculative, high-growth, high-risk. Never invest more than you can afford to lose. Do your own research. Read SEC filings. Understand the business model. If you want safety, buy an index fund. Rezolve is for aggressive growth investors. All right, let's recap. Rezolve AI ticker, RZLV, $2.55. 821 million market cap. Founded 2016. 26 employees. London, UK, Nasdaq listed. 5 catalysts. 200 million are for 2025. Double original guidance. 5-year Microsoft strategic partnership with Azure integration. Google Cloud partnership. Blue chip clients, including Adidas, Gucci, Target, KFC. Balance sheet strengthened with 49 million debt conversion. The stock hit an all-time high of $11 in May 2024. It's now $2.55. That's a 77% decline from peak price targets. Conservative. $5 to $6 within 12 months if they hit 200 million are for 2025 and show progress toward 500 million for 2026. That's a 100 to 135% return from current levels. Aggressive. $10 to $15 if they deliver on 500 million ARR by end of 2026 and maintain growth momentum. That's a 300 to 480% return. Downside risk. If execution falters or revenue disappoints, the stock could retest $1.50 to $2 levels. My take. At $2.55 with an 800 million market cap, you rebetting on whether Rezolve can scale from 200 million to 500 million ARR and become a dominant AI retail platform? The Microsoft and Google partnerships validate the technology. The client roster proves enterprise demand. But execution risk is real. Here's what you need to do. Subscribe to Velocity Stocks for more AI stock analysis. Hit that notification bell. Drop a comment. What's your take on RZLV? Is this the next big AI play, or too risky? Let me know. Smash that like button if you found this valuable. Check the description for resources. Final disclaimer. This is not financial advice. I'm not a financial advisor. Do your own research. RZLV is volatile, speculative, and high risk. Never invest money you can't afford to lose. Next time I'm covering another AI stock that just announced a massive partnership. I'm Sterling from Velocity Stocks. Let's catch these stocks in motion. Peace.